All right, good morning, everybody. We are back. I am sorry I am late today by about 5 minutes. I have something happening today that you guys don't know about yet, but you guys will know about it soon. So in the morning, I had to take care of some business with what was happening, and you guys will know more about it at like 1 to 12 p.m. So have to get some stuff done, but we are back. We are here for the market open. A lot of things are happening this morning that are pretty interesting. Tesla, obviously, yesterday, rough day for Tesla. Deliveries were not the best. I want to do some math and show you how bad those delivery numbers really were. We talked about it yesterday on the market close, but we'll go deeper on it today. We'll discuss that. Bitcoin, yesterday was a good day for inflows. Bitcoin fell to about 64,500, right now sitting at about 66,000, which isn't that bad for Bitcoin considering a nasty fall that we had yesterday. 65,933 yesterday. Again, just not a good day for Bitcoin. Cathie Wood's ARK had $88 million of outflows when it came to Bitcoin. So definitely was a little bit of a tougher day, but still Bitcoin up about 1% since then. So not that bad in the context of Bitcoin. So we'll talk about that. We'll talk about Tesla. We'll talk about a bunch of news we have on the macro. We got job numbers. I want to talk about the job report that came out. It's actually a bit better than expected. We'll go deeper onto it, but the headline number is private payrolls increased by 184,000 jobs in March. These numbers tend to be a little bit more reliable than the numbers that come out from the government. This is coming out from the ADP. So theoretically, jobs are in a good spot. People have money. Consumers have money. People are going to spend. If people spend, then earnings should go up. And we'll see how it plays out over time. But right now, not the worst thing in the job market. And we'll go deeper on those numbers going from there. And then we got Cathie Wood, who's on CNBC today, talking about a bunch of things. So we're going to start with her and see all the stuff that she has to say for today. Ray, Mark, I'm Beneficial, Daniel Kang, Switchblade, Sethi Roth, Jared, Mark, I get paid to rate, Adam, what's up? Other Zinc, Kevin, Sunny, Kim, David, what's up? Switchblade, Yeti, Nolan, Quarantine Quartet, Colorblind Collector. Thank you all for being here today. You're saying my hair is a little Alex Carpish. It definitely is a little Alex Carpish. It's just being all over the place here today. Duarte, General Weenus, what's up? Thank you all for being here today. Brad, John, Midwest. Cathie did buy the SoFi dip yesterday. 125,000 shares, I believe. We'll talk more about our purchases in a second. But speaking of Cathie Wood, here's Cathie on CNBC. Let's see what she had to say. Steve Cohen was on CNBC as well. He's the manager of Point72, which is one of the largest hedge funds. But let's take a look at Cathie, get some thoughts from her, and then we will continue going from there.
90. The trading range has sort of been the high end has been 85.
Things to talk about, including Bitcoin and the distinction between what's happening with Bitcoin right now and gold and the like. But I do want to start on Tesla.
Sure.
Because we've seen the price action in Tesla, which has fallen on the back of worse than expected numbers. And I'm just so curious what you think is happening at Tesla right now, and whether, and there are some analysts out there that now have gotten bearish or starting to believe that we are at some kind of big inflection point.
Right. So I think a couple of things are going on. First, and Elon's been talking about this in the quarterly calls, the consumer is under pressure. There is, even though these economic statistics are coming out and saying everything's just fine, you listen to these company reports one by one, most of them do not sound like these economic statistics are suggesting. And I think Tesla's been telegraphing the high rates. They've been cutting prices to offset them. And they will continue to cut prices. So I think there's economic weakness. There has been a bit of a backlash, I would say, and a pause, because you do have GM and Ford saying, wait a minute, we're going to take a pause here ourselves because we can't do this profitably. By the way, that's a positive for Tesla, you know, to have the competition doing this, and Tesla's just going full steam ahead. So I do think part of it's economic. And you can use all these other excuses. But if that is the case, what's going to happen, we believe, during the next 5 years, and you know that's our investment time horizon, we think the cost of an electric vehicle, the average electric vehicle, is going to be cut in half. And Tesla's new block manufacturing techniques and technology, along with AI, are a big part of this.
How much, and you've been buying on this weakness,
well,
if you want to call it that.
So as we were selling when it was around 400 and 350, when it's been cut in half, down 60%, is not the time to run for the hills if you believe Tesla.
Sorry, I was muted. I've never heard when a stock is down, you shouldn't sell by Cathie. I've always seen her do the opposite. So it's encouraging to see her say, oh, when the stock is down, you actually don't sell.
Is going to be, in this we also believe, the autonomous taxi network, certainly of the United States.
Right now, people are starting to think about Tesla again as a car company. I mean, I think that's what part of what's happened here in terms of the valuation cut has been people said at one point, oh, this is a tech company, right? This is an AI company. This is all sorts of things. And then there were always these bears saying, well, actually, guys, it's not that at all. It's a car company. Now, some people are saying, well, maybe it's a car company. What is it? And for the valuation to sustain itself and actually to move higher, does it have to be what you just talked about, a robo-taxi company, a AI company, and all of the above?
It epitomizes the convergence among technologies that we are seeing today. And the robo-taxi network is not an if, it's a when. It's already happening. Waymo is out there, proof of concept. So it is going to happen. And if you've tried version 12.3 FSD, you'll see that Tesla...
This is the full self-driving mode that we should say is not fully self-driving just yet.
Correct. But if you drive, if using it, you will find that it is becoming more precise, but also a little more aggressive, like a human being would be, instead of this, more cautious. So I think we're getting there, yes, but it epitomizes three technologies: robotics. These cars are and will be robots. And of course, he's got the whole humanoid robot going as well. Energy storage. Autos in the future will be electric. We believe in 5 years, 75% to 85% of all sales will be electric. Here in the United States and around the world.
Even with the pullback that we've had in terms of EVs and the adoption.
Think about this. Yes, because if we're right on what's going to happen to auto prices, the average EV will be in the $20,000 to $25,000 range. The average gas-powered car will be about where it is right now, or a little more.
When you have the GMs and the Fords and everybody else saying, we can't even make these things profitably to begin with, let alone to do it at half the price.
And just think about this. Tesla's doing it profitably and cutting prices in the process. It's pretty phenomenal. Can I just go, the convergence idea? I have one more. Robots, energy storage, they will be electric, 75, 85% in 5 years. And then artificial intelligence. This is the biggest AI project in the world. If NVIDIA is worth what it's worth, and we believe it's worth what the market's paying for, we think it's going to have an inventory correction out there. It happens regularly. We've been through very many inventory cycles. I have over the years with NVIDIA. So,
dude, I think she's wrong about NVIDIA. I really think she's wrong about NVIDIA. And the logical reason she's wrong is because if there is so much demand, they will be able to keep up with it. And Jensen talked about their supply constraint issues not being as big of a deal as the street thought it was in the Q4 call. She thinks that software is going to get more AI spend versus hardware. At the end of the day, to make things like Sora, you still need hardware like GPUs. So I think she's just not right about the NVIDIA thesis.
Definitely going to see an inventory cycle as companies reassess, okay, wait, how do we get ready for this AI age? And there is a reassessment process. We're going through it ourselves. But if NVIDIA is, if its valuation is correct, this AI project has to work.
What is Tesla worth? If you were willing to sell it at $300 or $400 and you're buying it now, what is it worth in 5 years?
$2,000. We're in print on that.
$2,000.
Yes.
Let me ask you.
Bruh. That means from 164, that's about a 20x, a little bit under that. I mean, shit, if it happens at 2,000, we'll put Tesla at what? So 400 is a $1 trillion market cap. So that's about a 5 trillion market cap in 5 years. Does that even sound realistic? Like, I don't know. Does that kind of, even if you're a Tesla bull, which I am a Tesla, but does that sound realistic?
And think about that. It's down 60%. This reminds me very much of 2018-19. We're in a bit of a trading range, and we will be until more and more analysts, investors understand how provocative the convergence of these three technologies is going to be.
Let me ask you this. when you think about the Magnificent Seven, a lot of people have taken Magnificent Seven and now called it the Fabulous Four or the something else, but Tesla's not in it anymore.
Right.
Is that the right way to think about it? What does your Magnificent Seven look like today? I always think about your fund as a lot of the Magnificent Seven.
Not really. We have actually, if you look at the overlap of our fund with the NASDAQ or the S&P 500, very little overlap, maybe 5%, Tesla, Meta Platforms. We think AI could be quite disruptive. There are other disruptive forces taking place that could dislodge some of the Mag 6. I mean, the GPT-4, for example. I don't have to go through Google anymore. I can just say, take me to a place where I can buy these shoes at the cheapest price for delivery, free delivery in 2 days. You know, that's disintermediation. That's technology at work.
Can you explain, and we were debating it last couple of days about Bitcoin, Joe and Becky, back in New York.
Yeah, I've heard.
Been together. You've seen it. What do you think is happening? I mean, we saw Bitcoin get up to $70-something thousand, drop down to $66,000. I was making the argument that it has been very tied to the NASDAQ. It's been very tied to the markets. And as a result, it is more likely a function of liquidity and sort of speculation than it is a function of what the Federal Reserve is going to do. Even though the Federal Reserve is sort of been moving the markets, what's your analysis of why it's moved the way it has?
Okay, up dramatically.
Right.
You have the ETFs. There's something else going on around the world. There are currency devaluations taking place that people are not talking about. The Nigerian naira is down 50-60% in the last 9 months. Egypt just devalued by 40%. Argentina continuing to devalue. I think this is a flight to safety, believe it or not, taking place. A hedge against devaluation, a hedge against a loss of purchasing power and wealth. That's very important. And we saw this even here last year in the United States. Regional banks imploded. Right. Bitcoin went up 40%. Bitcoin does not have counterparty risk. I think, and we're putting out a piece in the next few weeks, which is, this is both, get this, a risk on asset. And so you talk about the NASDAQ.
The risk on.
But it is risk off. I remember we got in at $250 when Greece was threatening to leave the euro, right?
But is that folks that are speculating about currency, or is that folks in Nigeria and in Greece and other places saying, I got to get my money out of this currency and move it themselves? Do you see what I'm saying?
Oh, yes. I think this is an insurance policy against rogue regimes or against just horrible fiscal and monetary policies.
All right. So that's Cathie. Let's talk about that $2,000 price target, because we haven't mentioned that in a long time. That's a lot, dude. That's a lot. I don't think that's as realistic as she may think it is. You can give me every bull case in the world, but it's really, really hard to it's just hard to imagine that this thing goes up 300% every single year. I mean, 400 is, call it a $1 trillion market cap. So that's 5 times 400. So you're looking at 5 trillion. 5 trillion in 5 years means they're theoretically adding a little bit more than $1 trillion every single year, given the stock is at 500 billion right now in market cap. In what world does the stock market think they're going to give $1 trillion of market capitalization to Tesla every single year, in a world in which their deliveries are probably not living up to the hype? So let me show some math I did yesterday. If you're a part of the market close, you saw this, but I really, really, really want to bring it to people's attention. The number that every Tesla shareholder needs to care about is 531,000. Why 531? So basic math. They did 1.8 million vehicle deliveries in 2023, 1.3 in 2022. That's a 38% increase year over year. They said on the call that the growth rate would notably slow down. So I'm assuming a notable slowdown is 10%. That's 28% down from last year. I think that's reasonable. I think if that doesn't fit the definition of notable slowdown, then if we're looking at 5%, you got to change the definition, because that's a horrendous slowdown. That's not just a notable slowdown. So a 10% CAGR in growth rate for deliveries would put 2024 deliveries at 1.98 million, up from 1.8. They did 387,000 yesterday in Q1. So to get to that 10% CAGR for the next 3 quarters, they would have to do 531,000 cars a quarter. And my big question is, can Tesla, given what's going on with China demand, given what's going on with interest rates, given what's going on with EV competitiveness, And overall, what's going on with the brand taking a little bit of a hit, given, you know, how Elon is acting. Can they deliver 531,000 cars a quarter? I don't know. But if they can't do that, then they're not getting to 10% growth. If they're not getting to 10% growth, it's a really interesting question about, like, well, then where's the growth coming from when it comes for Tesla? Energy is not going to be enough to overtake this. FSD is not going to be monetized this year. Robotaxis are not happening. The bot is not happening for like at least another 5-6 years, if that, in terms of monetization. So it's going to be hard to imagine that. So my question for Cathie is, if they're not selling at least a couple million vehicles a year, which at this point, given rates, they're not going to be able to do that. And even when rates come down, we are seeing more competition start to heat up. Where do you get a CAGR of 300% every single year? I could see a CAGR of like 20%, 30%. I think that's possible. Even that's kind of hard, but that's possible. But 300% is a little difficult, just a little difficult. So I think it's going to be difficult to see if that plays out. If you're buying into Cathie's thesis, you also have to buy into the Zoom thesis. She said Zoom would be, you know, $1,500 by 2026. We got 2 years left on that to happen. So I don't know. It's going to be very, very difficult, in my opinion, to have some of these price targets play out. And it makes me skeptical sometimes that she's an owner of Palantir, because the way she thinks about valuations and companies, it just doesn't make a lot of sense. It really doesn't sometimes. And so I'd rather her just not talk about Palantir. Let me analyze Palantir, please. Like, I know I don't manage $40 billion like you or whatever the hell she manages, but let me, in my room, manage the analysis on Palantir and look at the valuation model. Because I think at least I will give the public at least something that's reasonable versus something that's a little insane, like Cathie. Don't forget her buying DNA. Yeah, dude, that's the other thing. I mean, she has so much Ginkgo Bioworks, and dude, this thing has not worked out. This thing is, I mean, I was excited about Ginkgo like 2 years ago. And then like, I woke up and I was like, well, wait a second. Why is management selling so many shares? Why is the market cap 2.26 billion and they're doing like 50 million in rev? Like it's not, you know, like, and she has like 200 million shares of this thing. This is a startup that's like a lottery ticket if it ever works out, in terms of it's a synthetic biotech company. It could work out. It's just going to take a very long time. And she has a lot of her shareholder capital fed up into this thing. It went to 21 at the top in 2021. Now it's at $1.05. So it is a bit tough to see how some of these picks that she's making are playing out. Even Coinbase, guys, the reason ARK is down year to date, and I hate to hate on ARK because I love Cathie, and I don't want to seem as like I'm hating on her. She's doing what she's doing, right? She has her own different style, her own different philosophy, but she puts it so publicly out there. So she wants people to kind of talk and analyze what she's doing. ARK is down 8% year to date, and Coinbase is up 700%. Coinbase is the largest holding in her fund. Why is Coinbase up? I think year to date, like 30%, up 700% from the bottom, and Cathie's still not up year to date because her average on Coinbase is so high. A lot of these stocks, she just is sitting with a pretty nasty average. So even though they come up, it's not that much gain in the actual fund itself. And so, yeah, not the best we're seeing in the context of Cathie. Let's go back to CNBC. They had the Fed president on. I want to pull that up because Fed President Bostic, I think is his name. Yeah, Raphael Bostic right here. Let's see him. He was on CNBC for a couple minutes. Let's see what he has to say. Everyone's talking about rate cuts right now and if we're going to get 3 or not. So let's listen to him for a couple minutes and we'll see his thoughts and then we'll keep going from there.
Blame if that's the story. I will say that perhaps we're finding out that what's happened with the Atlanta Fed GDP now, given what's happened with the economic data we've seen. Do you feel like the economy is accelerating here?
So I don't know if I would say accelerating. I think it's maintaining the strong momentum that it's had really for the second half of 2023. I think everyone has been expecting it to slow at a faster pace than it has. And so it might feel like there's some extra energy, but I'm not hearing from my contacts that things are getting faster or stronger, that demand is moving in the other direction. It's really just staying very strong where it was. And if there's any weakness or weakening, it's just at a very incremental level.
We were talking just a minute ago about this idea that we had thought that the economy, Fed Chair Powell said it several times going back to, 2022 in Jackson Hole, the economy needed to slow in order to bring inflation back down to target. That did not end up needing to be true in 2023. Do you feel like it's needed now? Does the economy need to slow to hit that 2% target?
Well, I think over the longer arc, the economy does need to slow to get to that longer run potential. At some point, there's going to be just too much energy in the economy, and you'll start to see upward pressure on prices. But right now, the supply has responded quite well, both in terms of supply chain and labor force. And there's evidence to suggest that the productivity is elevated as well. So as long as those things are in place, I think you can still get growth and see inflation continue to come down. Now, I will also say, though, in that environment, we should expect inflation to come down much slower than what many have expected. And that's one reason why I've really tried to pull back my expectations on when we'll need to move, because if that trajectory slows down in terms of inflation, then we're going to have to be more patient than I think many have expected.
Raphael, I really want to come back to that.
All right, so that's the Fed president saying, hey, we got to be a little patient because inflation is going to take some time to come down. I think I agree with him. He's not saying anything super controversial. I think most of us would agree that, yeah, it's going to take a little bit of time for inflation to come down, and we have to be a little patient until it does come down. Markets' reaction to that this morning, not too crazy. I mean, markets are down, but they're kind of the same they were after hours yesterday. 517 right now on the S&P 500. Robinhood 1906 down 0.76% in the pre-markets. Palantir 2253. Palantir was 2272 yesterday, so it's trying to fight back for that $23 range. We'll see if that happens in the next couple of days. But right now, 2252. SoFi is actually up right now, 726 in the pre-markets. Why? Because SoFi got an upgrade from some firm. The firm is Kyle Peterson and Needham. Kyle Peterson and Needham. He just wrote an article. Let's show a quick little preview of that. For $10 on SoFi. For $10 on SoFi. So Kyle Peterson is given a buy rating due to a combination of factors that indicate strong potential for SoFi. Peterson highlights SoFi's comprehensive financial platform, which spans various services, including consumer lending, banking, and investing. He believes that SoFi is poised to become a leader in the digital lending and neobank sector. The optimism rooted in SoFi's strategic focus on serving prime and subprime consumers, which is likely to yield favorable unit economics. Additionally, SoFi's possession of a full banking license sets it apart from competitors who may not cater to high-income borrowers. $10 based on a sum of the parts analysis. So you're taking a lot of different parts of the business, putting them together. Lending business at $8 a share. Technology and other segments at $2 a share. So that's how Kyle Peterson is coming to the conclusion for SoFi at $10. I did buy SoFi spreads yesterday as well. I bought another 15 of those. So I have 215, call it about a $5,000 position. And that's what I'll be holding going into earnings. Earnings is out for SoFi April 29th. So April 29th, we will be live covering SoFi here. And we'll see if SoFi can, I think, at least jump back up to that $9.70, $10 range. That is my target on it. If that doesn't happen, then it is what it is. But I think it can meaningfully move from the $7 range back to that $9.70, $10 range after earnings. And so that's what we have right now in the context of SoFi. So that's why SoFi, I believe, is up yesterday. Another company upgraded Robinhood yesterday as well. Let me pull up the name of these guys. They upgraded them with a $20 price target. The basic thesis was they're pretty encouraged by what management has done over the past 18 months, and they believe there's market share to get. However, they did say like a lot of price action is happened for Robinhood. So they say $20 optimistically, but they're also a little bit cautious because, it hasn't moved a decent amount. Keefe, Barrett, and Woods initiates coverage with a $20 target. Oh, I didn't know this. This is an initiation. So this isn't just an upgrade or a downgrade or a neutral hold. This is an initiation. We saw another firm, Bernstein, initiate coverage on Robinhood with a $30 target. So when you see some of these firms, these boutique investment banks come out of the woodworks and say they're initiating coverage, it means that this stock caught their attention, essentially. And as you can see right here, Arnie says KBW is top ranked in consumer finance, been around since 1962, and they are an investment bank. So when these firms start saying, hey, we want to start analyzing this company and see how they're doing and really put them on our radar, that is a bullish thing because it means it means the stock has grabbed these companies' attention, not only by the price action, but also what the company has done. And they start doing research, they start talking about the company, and you start to get a little bit more momentum from the PR side around just different Wall Street firms discussing what's happening with these different stocks. Crossroads says, since tech and finance revenues equals 50% of their revenue in 2024, that price target is poised for an upgrade as they improve their guidance. I agree. The one thing about SoFi, though, is that financial services is 75% of the 50%, and then tech, which is Galileo, Technisys, are 25%. So the one thing about SoFi is that, yes, 50% of their revenue is not going to be lending. It's going to be tech and finance. But of that 50%, only 25% is going to be the actual technology part. And the technology part, theoretically, right, is what the street really wants to see grow, because that is the differentiating variable between SoFi becoming a sort of B2B tech startup, getting a different multiple versus just getting a bank multiple. So if that tech part of the business can grow a little bit more than 25% year over year, I think that the price targets can go up. Even $10, we all think, it should be a little bit more than $10, 12, 15. My price target end of the year is around $12. But we'll see if it can get to those levels. And look, one thing I'll say about SoFi is sentiment changes very quickly. PayPal was stuck at 55 for a while. The CFO went to a conference and said, hey, we're going to do all our free cash flow and buybacks, $5 billion in free cash flow, $5 billion in buybacks. The stock goes to 67. Robinhood, right? They come up with Q2 earnings or Q4, really good. February numbers, really good. Gold product event, really good. And then sentiment changes. SoFi needs a string of events to really change the sentiment. And when that happens, especially with the short float at 23%, you might have some shorts start to cover. We might be out of this kind of range we're stuck in between $6 to $8. But the question is going to be, does Noto have the catalyst ready to be able to do that? Now, one thing about SoFi that is pretty annoying, I don't know if you guys got this email yesterday, and Noto kind of responded to it on Twitter, but I don't know if it's the best response. I got this email yesterday by SoFi. Look at this. I've known this for a while, but I got reminded to it yesterday. $25 inactivity fee will be applied per account after 6 months of not logging in. So they updated their fee schedule, and they said, hey, Amit, if you don't log into your SoFi account, you're gonna charge $25. Now, look, is it the biggest deal in the world? No. Noto responded on Twitter yesterday, basically saying, hey, this is not really our problem. We work with third-party banking partners, and if you don't log in, then we might have to literally take the money and put it somewhere else. So we have to charge you something to incentivize you to log in. I still think that's bullshit, dude. At the end of the day, if you're a modern day tech company, you have to figure out a way, or you have to eat that cost. You have to do something, bake it into the sign up fee or something. Don't make it an obvious psychological, a downside to banking with SoFi by telling me you're going to charge me $25 if I don't log in after 6 months. Theoretically, if you're encouraging long-term investors, they shouldn't be logging in all the time, right? They're not traders. They should just be putting their money there and just not looking at it. So the entire sort of paradox of SoFi is they're trying to get your money right, and they're trying to encourage you to be long-term, but then they're saying you have to check it every single day, and then you have to log. It makes no sense. It makes absolutely no sense. And I think it's $25, dude. They can innovate a way. And if you can't innovate a way to get through that $25, even if it's just on marketing by charging me an extra $25 when I sign up or something, right? Even if you can't literally get through that $25 fee, then there's some problem in regards to innovation at the company. And I think they should definitely figure that out. It's not the biggest deal in the world. It's really not, but it is annoying. And I saw a lot of people yesterday were pretty upset based on that fee. Granted, I do think $10 is possible after earnings, and then we'll see where it goes from there. Now, what did Cathie buy yesterday? Speaking of SoFi and Tesla, Cathie bought 234,000 shares of Tesla, which is about $40 million. It's so interesting because we're going to talk about Tesla a little bit more, but if they can't do 531,000 cars a quarter, I mean, is this 165 the bottom, dude? Because it doesn't feel like it. It feels like there's going to be a little bit more pain to come. And so I'm not sure if this was the best day to drop that big buy because we know Q1 is going to suck now. If they only delivered 387,000 cars, this is the lowest number of cars they've done since April 2022. If we know that that's a bad thing, either the expectations are baked into earnings or earnings numbers are going to be bad. And if earning numbers are bad, then yeah, 165 might not be the bottom. So it was interesting seeing her do a very big purchase yesterday. And she also bought 125,000 shares of SoFi as well. So that was the updates on what Cathie did for Tesla. TJ, the wheel deal. Shout out to TJ. He says Cathie is spending other people's money. It's easy for her to keep buying and buying. You know, I actually do come across that thought many times, which is that Cathie manages about $8 to $10 billion in capital. And it must feel like a game at some point, right? Like when you're just like when I am choosing to buy, another 20 shares of Palantir, that's $400 for me at this price. $400 isn't breaking the bank, but it's $400. Like at this stage of my life, $400 is still $400. And I'm like really thinking, all right, I'm making this purchase. Like I'm going to spend $400. Cathie, when she's buying, 20,000 shares of whatever the company, it must be just like fucking playing like an arcade or something. Like I'll buy this, I'll sell this, I'll buy this. And I think she hasn't shown a sort of respect for shareholder capital, not just by the fund's performance, but by some of the egregious buying. Like, can someone tell me why the ARC F FinTech Fund, okay? Please tell me why the ARC F FinTech Fund has fucking Spotify. Why? What does it? How is Spotify a fintech, dude? How? I don't get it. Spotify doesn't even make any money. They're not profitable. How is Spotify a fintech? Like some of this stuff just doesn't make sense. And you could say, oh, she's just putting some shares in this fund to work with that fund. Yeah, but then it's not thematic investing, right? If you're saying, oh, she just needs to like allocate some capital in the fintech fund in this space because she'll eventually sell it and then she'll move it into another space and it's just a place to park her cash. I don't care. If you're telling me I'm investing in fintech and I'm getting exposure via ARCF's ETF, why is Spotify in that fund? Wow. Josh said finance podcast. That's a good one. That's a good one. Finance podcast. Oh my God. Or Pinterest. Yeah. How is Pinterest? Or Roblox, as Chris says in the chat. How is it Roblox? It was meant to be Shopify. They clicked Spotify instead. Oh boy. Oh my gosh. My big thing about Cathie, last thing I'll say here is that I just don't think the research team that they employ is really doing good research. I mean, I've seen some of the videos their YouTube team puts out, and I hear like the chief futurist, Brett Winton, talk, and the level of just like, I don't know. It just feels like they think they're smarter than everybody else, and the fund performance doesn't justify being smarter. So when they're talking, it's just like, yeah, but you guys are buying really high and selling very low. So like, why is there all this perception that you guys are doing all this great research? Because at the end of the day, in finance, research is not just for fun. Research has to translate to getting stocks at asymmetric opportunities, right? Prices that are lower, and then they go higher. They got that right with Tesla in 2016. And ever since then, nothing else has really happened, which leads me to believe the research team just might not be that good. I mean, it just might not be that good at the end of the day. Now, granted, if Tesla outperforms and Coinbase outperforms, which Coinbase has already outperformed, but if Tesla really outperforms in the next couple of years, ARK will be like $100, $200 ETF if it actually gets to $2,000 a share. But we got to see if that actually happens, right? We got to see if that happens. Speaking of Tesla, let's transition to this. This was very interesting to see yesterday. Arnie posted this morning about Ross Gerber. So yesterday, Ross Gerber said that basically said the entire board of directors should be replaced for Tesla, right? So as you can see right here, he says, for over a year, I've been warning about this potential reality. Now it's here. It's time for shareholders to assess the blame where due. The Tesla BOD should be replaced immediately where independent directors as required by law. Holzmarg catalog said, however bad the delivery numbers look, I'm certain they would have been worse with Ross on the board. Ross did try to run for the board a long time ago. And then Elon actually responds, he's such an idiot that he can't even tell he's an idiot. BYD sales dropped by 42% from last quarter. This was a tough quarter for everyone. So we finally got some Elon commentary on the quarter before the earnings call. This is likely what Elon is going to say. By the way, Tesla earnings, I think, is going to be April, like they put out the number yesterday, April, like in the April 20th range. And it'll be live streamed on X. I don't know if this will do YouTube, but it's going to be on X. Elon's basically going to say in the call, hey, it was a tough quarter for everybody. And if it was a tough quarter for everybody, this lets you know a little bit of the inside around how Elon's feeling. It's not just about, demand or competition. His argument is that if BYD's sales are dropping, then that means, of course, Tesla sales are going to drop because across the board, there are some issues going on from an economic perspective and obviously from an interest rate perspective in the United States, which is one of Tesla's biggest markets. But calling him an idiot was kind of it was kind of funny. I'm not gonna because Gerber is someone who built his career off Tesla, and he's someone who wanted to run on the board of directors. And you got the CEO of the company calling someone who tried to run for the board such an idiot that he can't even tell he's an idiot, which is, it is what it is. It's one of those things that maybe Ross can't just take his victory lap just because it's so sad that Ross became Ross because of Tesla. And now he's running a victory lap because Tesla's down and he's like, haha, I told you so. It's I don't know, dude. It's an off-putting feeling. Like it's one of those things in life where you're supposed to be grateful for opportunities. Tesla has given you so much opportunity. It's built your entire brand. And you're so ungrateful that now you're going to shit on Elon and Tesla because you're upset with Elon's political views. Ross really hates Trump. He's a Democrat. He really hates what Elon's been saying on Twitter, all that stuff. But in my opinion, and I think it's just common sense, I don't think Elon's tweets are the reason why Tesla is down. I really don't, dude. I think there's a lot of reasons Tesla is down. The biggest one being rates. The smallest one being Elon tweeting about the border. Like, yeah, maybe some people won't buy Teslas because they don't like his political views, but that's not the bigger reason, dude. Like that, it's more macro and economic, and Tesla can't control that at the end of the day. Robinhood, 1885, falling 1.82% of the pre-markets. Palantir, 0.92. Tesla, 1.46%. So we're seeing a little bit more downside in the pre-markets right now. DJT, Donald Trump, up 1.36%. PayPal is down. Bitcoin falling just a little bit. It was at 66,000. Now it's at 65,720. So that fall is hurting some of the crypto stocks. Let's go to the crypto ones before we get into the market open. MicroStrategy up a little bit. CleanSpark up 0.24% at 1687. Coinbase down a little bit, 0.74%. Iren up 0.17. Hut 8 Mining up 0.21. And Marathon down 0.41% right now in the pre-markets. Robinhood 1892 down 1.4% as well. Cool. So that's what we have here. Just like Meet Kevin. Yeah, pretty much like Meet Kevin. He's doing the same thing with Tesla. If we go to GK, which is Ross Gerber's fund, and we just look at it over the past 5 years, that's the other reason it's really hard. I mean, this thing came up at $28. It's at $20 right now over the past 3 years since it went public. It would be one thing if Ross's fund, Gerber Kawasaki, was outperforming Tesla and outperforming all these other stocks. It's not like his pick of stocks are performing that much better. And in this game, it's a ruthless game. It is, are the stocks you were picking going up or down? That is your credibility. That is your lifeline. That is the way people interpret you. That is everything. And for Gerber managing $2 billion, like that matters. If his ETF is not really doing much better than Tesla, then it's just weird seeing him run a victory lap, right? It doesn't make a lot of sense in the grand scheme of things. So that's the update on Tesla. We'll see how it opens up right now at 163. Going to be interesting to see how this opens up. Jobs report. We got those job numbers. We'll go deeper into it after the bell, but private payrolls increased 184,000 jobs in March. That is up from February's gain of 155,000. That's technically not the best for inflation because that means people have more jobs. They're going to be spending more money, but that is good for the economy because if people have more jobs and they're spending more money, then earnings should theoretically go higher for companies, and hopefully we can navigate inflation as people get more jobs. So we'll see how the market reacts to that jobs report as the market opens. 9:30 a.m. Wednesday, April 3rd. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Here we go. Stock market is open. Tesla opens down about 0.58%. We are at 165 for Tesla. 165 for Tesla. 164.82. All right, so Tesla opens down 1% on the day. Coinbase down 0.88% on the day. 243. This was at 239 yesterday. Arc Innovation 47.42 down 0.75%. DNA $1.04. Down 0.48% on the day. Robinhood, $19.04, down 0.83% on the day. Palantir, $22.60, down 0.55. It hit $21.80 yesterday, bounced up to this $22.40 range, now at $22.60. Intel, $41.59. Why is Intel down 5%? Because they put out some projections on financial numbers yesterday, and Intel basically said, hey, our foundry business, it's not going to be profitable until 2030. And we're going to be in a couple $1 billion loss until then. The foundry business is very important. It's part of their chip manufacturing business throughout the United States. They just got a $20 billion subsidy by Biden to be able to make chips in the United States. But they just told the market, yeah, don't expect any profits for like the next 6 years. Because they're being realistic, right? At the end of the day, they're saying like, look, this is a big operation. We have a lot of money, but it's going to take time. So the market's like, all right, if that part of the business is not going to be profitable, then we're going to sell off the stock. 5% down on the day. I think Intel recovers. Intel is pretty range bound between 40 and 44, so I think it will recover. But right now, down about 5%. S&P 517 down about 0.15%. SoFi 731. SoFi is actually up 1.32%. Maybe it's because of that upgrade by Kyle at the $10 range. That might be the reason. I don't know if he's that important of an analyst, but maybe the market was looking for a good reason to buy up SoFi, and his analysis was better than some other analyses. I think another bank as well, I'm forgetting the name, but they came out this morning also saying SoFi is around that $10 range. So we're seeing before earnings, some of these price targets go higher, which indicates that, maybe there is an earnings pump that the banks are looking for as well. The CHIPS Act got revoked as well. Yeah, there's a $2 billion part of the CHIPS Act for R&D that got revoked, not the entire CHIPS Act, but that was another reason why some of the semi stocks, including Intel, took a little bit of a hit. CleanSpark up about 0.65%. This one fell from 24 to 1680 yesterday. Nasty fall. Obviously, Bitcoin fell from 71,000 to 64,000, and they did an $800 million at the money offering. I think the market would have been fine with the offering if Bitcoin didn't fall like $7,000, but that was just, that was, the market was not going to be able to handle that. So CleanSpark up a little bit on the day. Nvidia 888, so not in the 900s anymore, but still inching higher. Reddit at $50. MicroStrategy 1593. PVH, this company is down 20% from yesterday. It's basically flat on the day. They make Tommy Hilfiger and Calvin Klein. Sales are up 2% year over year. Gross margins about 85%, or sorry, not 85, 55%. Not enough for the street to get excited for it. So that's why this one took a nasty tumble yesterday, down 20% on the day. I was speaking to some people on Twitter. They were saying that Tommy Hilfiger and Calvin Klein aren't even luxury brands. So yeah, it's not even that big of it's not an LVMH type of situation by any sense. I thought they were a little more luxury, but people were saying it's not that much. So that's another reason why sales are up barely 2%, but gross margins are not as high as an LVMH. TFC 37.99. Google 152. Google again been holding up really well over the past couple of days. They're down about 1% on the day. Let's go to Apple. Meet Kevin sold ASML, AMD, and Intel yesterday for Apple and Amazon. So he bought Apple, he bought Amazon. He basically traded some of the semis for the big tech companies in the PP fund. Tesla right now 166, Apple 168. So Apple still below 170. Apple at 160 becomes a no-brainer to me. At 155, it becomes a load up the boat. At 168, I don't know. If you're excited for it, you're excited for it. But a real value to me goes down to that 160 level. That would put Apple at about 2.4 trillion. Right now it's at 2.6. I think there's a little bit more risk reward built into that. I think there's, Apple is Apple. At the end of the day, they're going to buy back their stock. They have a couple $100 billion in cash. They're going to be fine. But the market's looking for some type of growth catalyst. And right now, Apple's not providing it. Meta at 502, Microsoft at 419, Google at 154. Right now, PayPal's green. Okay, let's go to PayPal. How green is our pal? Wow, 64.76. There you go. 64-ish range. Let's see if we can get back to that $65 range that we were stuck at. Robinhood, 1921. Robinhood is now green on the day, up 0.16%. Palantir, 2247, down about 1.14%. Nvidia, 889. SoFi, 727. Chipotle, 2907. And PayPal at 64.63. Trying to get back to that $65 level. Coinbase here as well, green at 247 right now. Are you planning options or stock with Apple? I haven't even decided if I want an Apple position. I want the price to really get exciting. I still 168 gets you closer to. Hold on, let's look at this chart. I think the last time we got that was even beyond summer of 2023. It was. Let's look at the Apple chart. So the Apple stock, last time we were at these levels, let's do 5 years. Last time we were at 168. Yeah, basically April 2023. Wow. So a year later, it's almost like there's been nothing happened. Wow. They announced the Vision Pro. They didn't do anything else but announcing the Vision Pro. So in a year, the stock basically went nowhere if it gets back down to that 164 range. Yeah, so 160 is what I'm looking for to get excited. I think I would just buy stock with Apple, quite frankly. Apple stock is just stock you want to have for a while. It's just a core pillar of the portfolio. I don't think you can go necessarily wrong with, but the price has to be good because the price has been bad for a while. So, maybe 160-ish looks more exciting when it comes to Apple. Look at their balance sheet. Worst case, it's a savings account. Yeah, I mean, their balance sheet is pristine. The growth is just not there for Apple. And if they show any type of growth in WWDC with the AI-enabled iPhone or whatever the hell they're going to announce, that is going to get the market a bit more excited about Tesla about Apple, because they have so much cash. Maybe they buy a company. Maybe they actually do something. That hasn't happened for a while, but maybe they do that. They just need to do something that gets the market a little bit more excited, and I think we're going to see momentum but it's going to take time for that to happen. Robinhood, $19.28 right now, 0.39% on the day. Chipotle, $29.07. Apple, $169. DJT, $51.50. So far, the Trump plan to get rich off of this company and use it as collateral to do whatever you need to do is working. Now, he can't access the funds yet. It's at $5.8 billion. He needs to wait 6 months to access his 60% stake, which is a little bit over $3 billion. So it's going to take some time. But if this valuation holds up somehow for DJT, then he's going to have access to $3 billion liquid, which is going to be really interesting. Oh, speaking of that, Billy Bag Donut says, Amit, I made $20,000 off of the Donald Trump stock. Super small float, lots of volatility, lots of potential. I am not buying this company. I would encourage people to just be a little cautious engaging with things like this, because you're buying it purely either out of political affiliation or because you want to make money off of it on a trade, which is fine. That's not a bad idea. You just have to understand the risks that if you're getting into it for a trade, this thing could dump 30% in a day because there is nothing fundamental holding this up. Now, granted, I don't think it's going to dump 30% in a day because I think there is enough people and enough hedge funds. We talked about the Susquehanna international groups of the world that want to make sure TikTok doesn't get banned. They've gotten very friendly with Trump. One way to give Trump money is to make sure he gets elected so he doesn't ban TikTok, which he's totally changed his tone on TikTok, is just to buy shares in his company so that he has access to the liquidity without literally giving the money to him. It's a sort of loophole that is actually working pretty damn well for DJT. So there are some special interests that I think are going to prop this thing up, at least until the election. But still, it's very volatile, and you just want to be a little worried or a little cautious on what might happen there. Tesla reports April 17th. Okay, so Robinhood's reporting May 8th after hours. Tesla is reporting April 17th. And then I think PayPal is doing April. Let me see. PayPal is going to be doing April, I think, 30th. April 30th. PayPal is doing April 30th. So PayPal will be doing April 30th. And we'll see what it goes on from there. SoFi's up 736, up 2%. That is correct. SoFi's getting some momentum here. SoFi getting a little bit of momentum right now, up 735. Maybe those price analysts or those price targets from those analysts got PayPal or got SoFi a little bit more excited. PayPal as well, 65.05. Tesla right now at 165 on the day. April 30th morning for PayPal. Okay. So, oh wow, it's AM. It's not PM. Interesting. It's AM, not PM. Huh. Wow. They're doing it in the morning. I don't know if that's bullish or bearish, but they're doing it in the morning. That's interesting. Okay, cool. Let's get an update from Pomp. He's on Fox Business today talking about Bitcoin, and then we'll go deeper and discuss what's going on in the world of Bitcoin. We have some not so bad outflow numbers yesterday, but we also did have some outflows from certain funds that haven't had outflows before. BlackRock and Fidelity did buy a decent amount of Bitcoin. We'll talk all about that after this clip. Here we go.
All right, locomotive continues, folks. Bitcoin ETFs trading 111 billion last month, triple what they did in January and February. With us now, Pomp investment investor Anthony Pompliano. You know, Pomp, this is the kind of thing you talked about, right? I mean, the demand has been absolutely through the roof. And here's the interesting thing, though. Because it went, I guess, what was the high recently? 75, 72, something like
72,000.
that? 72,000. It's pulled back to 65,000. A narrative they're out there now saying, see, gold is up and Bitcoin is down. It's not a store value. What do you say to folks who are saying maybe it's got some investment opportunities, trading opportunities, but it still hasn't proven itself as a store of value?
Well, when you want to store value, usually what you're talking about is not storing value from yesterday to today. What you're trying to store value is from today for 5, 10, 15, 20 years, right? And so when I think of Bitcoin, I think about, can I actually preserve my economic value for my kids or my grandchildren? And right now, Bitcoin, I think, is probably the best place that you're going to be able to do that. Now, if we go and we look at what people have been historically using as a store of value, there's gold and there's dollars. Gold is up. It's near an all-time high. But we're talking about now it hits an all-time high because it goes up $10, $20, $30, right? These moves aren't meaningful to people who buy gold right here and see a $30, $40, $50 increase in the price. Now, the dollar is down in purchasing power terms, right, 25% since 2020. So you've lost 25% of your purchasing power in 4 years. Bitcoin during that same time period is up 800%. And so what I think people are starting to realize is, wait a minute, if I store some or a large portion of my wealth in Bitcoin, everything around me gets cheaper over time rather than more expensive. And that's what you want out of a store of value.
Larry Fink on our network last week made a lot of news. I mean, are you surprised at how much someone like him, he has come around? I mean, a couple of years ago, he was definitely in a no Bitcoin camp.
Yeah. Well, I know that there was a lot of people who spent a lot of time with him, really educating him. And I think that both Larry Fink and the folks at BlackRock don't get enough credit for the work that they put into it. This is not a, hey, I woke up one day and all of a sudden I think Bitcoin's good now. Right. They went and they did the work. They did the research. They really spent a lot of time. There's a gentleman over there, Robbie Mitchnick, who leads digital assets. He spent a bunch of time talking internally with folks, really trying to make sure that everyone knew what is it that we're going to be buying and offering to clients. Now, Larry Fink is one of the kings of finance. If Larry Fink says, hey, I think this has got a shot, people are going to listen.
Sure.
And so what's interesting is the messenger really matters. There's things that Bitcoiners have been saying for 10, 15 years, but now all of a sudden when it comes from Larry Fink, it has a different weight to it.
Yeah.
And so I think that we should only continue to see the traditional finance folks kind of take those same talking points and repeat them in different mediums.
You know, it's
All right, so pomp is pumping up for the Bitcoin. Look, his core argument about store of value in the context of gold is very interesting because a lot of the Bitcoin people say that gold is dead. It's not moving anywhere. Gold's at an all-time high. And so, yes, Bitcoin has done, 100, 200% or whatever in the past year. Gold's still up. And for every $450 that gold moves up, for every 3-4% gold moves up, it's a $450 billion in market cap, given it's like a 10-something trillion dollar market cap. So it is a big deal in the context of gold. Now, here are the inflows yesterday for Bitcoin and outflows. So Grayscale got rid of 81 million right there. Cathie's fund, this surprised the crap out of me, lost $88 million. I don't know if Cathie has too many retail investors in the ARK-B fund for Bitcoin, or if there's some institutional investors that just took away the money from ARK-B and put it somewhere else, but that doesn't make sense because the fees are comparable to the other guys. So $88 million left ARK-B yesterday, had no idea why. I have to imagine there's a retail that got really scared that Bitcoin fell 5% and they just sold. So that was one of the outflows we saw. And then BlackRock brought in 150 million, and then Fidelity brought in 44.8 million. So we did see some momentum come in on the Bitcoin ecosystem in regards to the inflows, but we did not see a ton of inflows, and we actually saw a couple of outflows, which were obviously not that good for funds like ARK-B. So that's what we saw in the context of Bitcoin yesterday. Okay, we got to talk about another thing as well. Thomas says, imagine if Buffett's secret position was Bitcoin and he was only keeping it a secret to hide it from Charlie. Dude, that would be insane. If Buffett actually is a Bitcoin bull and he's keeping it away from Charlie, that would be insane. Where do you get the flow chart for Bitcoin ETFs? I'll put it in the chat right now. This is the flow I use every single day. You can use this one. Okay, let's talk about what's going on in Taiwan, because I didn't get to talk about it this morning, but obviously we've got some issues going on right now in Taiwan. There has been a pretty dramatic earthquake in Taiwan, and it's not been good. It's a 7.5 magnitude earthquake that happened yesterday. TSM, let's actually look at their stock. I didn't check them right now. Tesla right now at 164. TSM 139. So they're down a little bit, not down as much. But it's been an earthquake that has been pretty bad. Now, all the workers that work at Taiwan Semi are fine, and they are going to be okay. And at least that's what they've been. That's what I've been seeing, that they've been fine. They're back to work, and nothing too crazy is happening from there. But here's an update on kind of what's happening on that earthquake and how bad it actually was. Here we go.
Katoa, good evening. New Zealanders holidaying in Taiwan have described their terror at being trapped on the 16th floor of a building as a magnitude 7.7 earthquake struck the island country.
Buildings have collapsed in the city of Hualien, where at least 4 people are dead and dozens are reportedly trapped. As Nick Truebridge reports, at least 50 people are injured.
Miraculously, these children emerged seemingly unscathed from this quake-battered building. The magnitude 7.7 earthquake struck 18 kilometres south-southeast of Hualien City at 7:58 a.m. local time. This TV presenter live as all hell broke loose. Elsewhere, the earthquake trapped locals in buildings, brought traffic to a standstill, and caused landslides. We spoke to Kiwis on the ground who recounted a sense of dread.
Just violent. It's the biggest and longest earthquake I have ever felt. Like, it's nothing. That was just next level, and especially being so high up in a building. It was absolutely terrifying.
Delphine Herbert landed in Taiwan last night with her partner. This is what greeted them this morning.
You're in a foreign country that you've just landed in. You know about earthquakes, and we were on the 16th floor of a hotel. So it's not like we could just, run outside and get away from the building. We had to just stay put in the doorways. And there were definitely moments when I thought, what if the building collapses?
They're supposed to be here for 3.5 weeks. Now they're not so sure.
We're kind of rethinking those plans now because we don't really want to be around earthquakes for the next couple of weeks, but also, some of the places, especially along the coast and in a national park not far from here, that there's been a lot of damage, a lot of landslides.
But Delphine, the people in these pictures, are the lucky ones. It's not known how many might be trapped as destroyed buildings litter some of the island cities. The rescue effort just starting after the biggest earthquake to strike here in 2 decades. Nick Trubridge.
Pretty rough, man. Pretty bad. And hearts and prayers go out to the people of Taiwan. Jacob Hellberg, who is one of the senior policy officials at Palantir, he was in Taiwan. And this is a live shot from his room in Taiwan this morning. Pretty rough, man. Pretty rough. Now, what does this mean from a geopolitical perspective and from an investment perspective? Number one, I think it goes to show why Intel's foundry business is so important. A lot of people were saying, why did Biden give Intel a $20 billion subsidy to start building chips in the U.S.? This is why, right? Taiwan, not only from a geographic perspective in terms of where it's located just above Earth that is leading to certain issues. They've had earthquakes before 1999. So that's one concern, because imagine the earthquake was even worse than this, and then the entire chip making the factories and the manufacturing kind of fell apart, went to shit. I mean, the world would stop. If we don't have semiconductors, we are screwed. So that's a reason we need to diversify. That's just a logical thing every country on the planet should be on board with. And number two is because if an American company is not building it ourselves, we are always going to be dependent from a geopolitical perspective on another country. And if that country were to ever get invaded by China, that would be very bad from an economic perspective. Taiwan yesterday said that there were 30 warships and 9 fighter jets from China surrounding Taiwan. And so it's like Taiwan had an earthquake and those ships and those jets came up, and just to kind of monitor what was happening. Obviously, Taiwan doesn't want to be monitored when that's happening. One could argue that China could theoretically see that as a massive opportunity. There's instability. People are being displaced. There's no organization that Taiwan has in order to be able to prepare for an attack. That would be the best time to invade a country when they're completely caught off guard. So, I mean, there's a lot of different factors here when it comes to Taiwan. And I think it's just really, really important for us to have our own chips and us to have our own factories, but for us to also be able to navigate what's happening in Taiwan in the best way, because you just never know what could happen from an earthquake perspective or from an invasion perspective when it comes to Taiwan. Sahil says there is no way Intel can catch up with TSMC's manufacturing capabilities. I agree. They're probably not, but we got to try. Right? And if it takes 15 years, then it takes 15 years. Taiwan sent me right now $140, but we definitely need to try. Because if we are solely reliant on Taiwan, for the foreseeable future, it's just not a good position to be in. I don't think anyone wants to be in that position. And I think that's where the bulk of our money needs to be going. And so I was actually happy Biden passed that $20 billion subsidy plan. Will Intel be the one to do it? Hopefully, we'll see. But I would imagine that Sam Altman raising $7 trillion, it's also because he realizes, hey, we can't just rely on all these other countries. If this is the new oil, we need to start making some of that oil. TSM is investing in Mexico. That is correct. A lot of companies are investing in Mexico for their import-export manufacturing needs. Mexico is becoming a very, very big player in this place. I think 23% growth year over year in manufacturing in Mexico, which is huge, dude. That is insane growth. So Mexico is one of those plays. I got to do more research on different ways we can get exposure to Mexico. Right now, the only stocks I know are Nubank, not Nubank, that's more Latin America, but Mercado Libre, which is kind of, but there's got to be other ways to get broader exposure. and got to look into different manufacturing houses or companies that own manufacturing houses, because I think they're going to explode over the next decade, given companies are leaving China for Mexico and India. Palantir 2247 right now, Robinhood 1905, Coinbase 248, PayPal 64, TSM 140, Reddit 47, MicroStrategy up 1.5% of the day at 1603, Bitcoin 65,000, Boeing 188, AMC $2.98. That's down about 3%. Disney 122, IWM down today. Makes sense. Market's down. Small caps will be down 204. Google 153 and Microsoft at 419 on the day. Nubank and Melli are the two big ones. Yeah, those are two big ones to get exposure to LATAM. And they're, Nubank and Melli have done pretty damn well over the past 4 or 5 months. Earnings weren't the best. I mean, earnings were good. The market didn't really react that much to the earnings because the stocks have already done really well. Nubank right now is at what, $12? $11. Yeah, it was at $7 in October. So it's up 40% since then. But their growth has just been absolutely incredible. And one of the chief product dudes for credit at Nubank is joining Robinhood, which is how Robinhood is starting off to lead their credit mitigation problems or assessing credit risk in regards to launching the new credit card. Let's talk about Robinhood for a second. So here's one stat I found yesterday that I thought was really, really interesting. I started looking at Schwab. I haven't looked at Schwab and their earnings ever. And yesterday I was like, you know what? Let me go through Schwab. What is their market cap? How many customers do they have? Like, I actually want to see what is Schwab about and kind of how much money do these guys actually have under management. And what I saw was pretty surprising. So Robinhood has 118 billion assets under custody, 23.7 million funded accounts. Schwab has 8.5 trillion, 34 million funded accounts. So Schwab has 72x the amount of assets under custody that Robinhood has, but only 11 more accounts. Robinhood has about 68% of the number of funded accounts Schwab has. There's about 65 million funded accounts. So Robinhood has about 36% of those funded accounts. Schwab has a little bit over 50% of those funded accounts in the entire United States. What does that mean? To me, it's pretty simple. It means that Robinhood has room to grow. Schwab has a market cap of 130 billion, and they print 5 billion net income every single year. 2023, they were actually down to like 4.7 billion or whatever, but call it 5 billion every single year. Robinhood just became GAAP profitable. They have a market cap of 16 billion, really 11 billion if you take off the 5 billion in cash, and they have almost 70% as many accounts as Schwab has. Schwab has 33,000 employees. Robinhood has 3,000 employees. So the question here is going to be how many of those accounts, many that have multiples beyond the average customer account size of a Robinhood user, would be willing to use a new brokerage or use Robinhood in addition to Schwab. And so my thing is, you're not getting rid of Schwab, Fidelity, Vanguard. Those guys have trillions of dollars. They're not leaving. People love them. People use them. But if you can offer some incentives, could some of that capital leave those legacy accounts and make its way on to Robinhood, given how small Robinhood is, but how fast they're growing in comparison to the big guys? And as I was doing that research, I saw this video yesterday on YouTube. Here's a guy who has 200,000 subscribers on YouTube. It's a minute-long clip of him talking about what it was like to set up his Roth IRA on Robinhood.
Smartphone, otherwise known as an iPhone. And like I said, I already had an account, but the first thing I had to do was open up an IRA. And it turns out you tap once because you want to open up an account. Then it asks you, well, what kind of account do you want? Well, for me, it was a traditional IRA, so I had to tap a second time. And then it said, okay, can you agree to our terms and conditions? I agreed. And that was it. I was done. 3 taps and I had an IRA at Robinhood. It was so quick, I thought I'd missed something. I kept going back to figure out what I did wrong. It literally took me 10 seconds. Not kidding. And that's only because I'm a relatively slow tapper. You younger folks, I'm sure, can do it faster.
So, I mean, like, that just goes to show you, it takes 10 seconds to open up a Roth or an IRA. I mean, like, that is why product really matters and why it's becoming user-friendly for a lot more people. Okay, let's talk about ELF. ELF is down 10%. I don't know why ELF is down 10%. If anyone has any updates, let me know in the chat. I'm trying to see why ELF is down. I'm pretty sure there has to be some news because it doesn't fall for no reason. So let's look at ELF on Twitter. Let's see what we got. Let's do this live. I'll show you guys my DD live. We're going to go on Twitter and we're going to search hashtag ELF. And let's see. Looks like ELF is trading in sympathy with Ulta on the news that Ulta is seeing a slowdown. Ah, there you go. There you go. So Ulta Beauty at the JPM conference today said that they're off to a slow start. Wow, Ulta's down 10%. They expect Q1 same-store sales to be at the lower end of the initial forecast, indicating a slowdown across all segments. This contracts with their previous full-year growth estimate of 4 to 5%. So Ulta said, hey, we probably won't even grow 5%, like we said a couple of months ago. Ulta's down. Okay. And that means Elf is down. Now, it's interesting that they're trading with each other. Wow, Elf's down 11%, dude. The market really is upset at makeup today. Ulta's down almost 13%. It's interesting because Elf has a different go-to-market than Ulta. Elf is primarily rooted in social media first from Ulta. And I know it's a basic argument, but if you just look at the history of Elf, they sponsored so many YouTubers in the early days, and they just built a real brand. If you could look at Elf on TikTok, it's a bigger brand with social media. So if Ulta says, hey, our sales are going to slow down, to me, that is indicative of either the consumer being weak or their marketing efforts not being strong enough. If the consumer is weak, yes, that will affect Elf. If their marketing efforts are not strong enough, I don't think that's going to affect Elf, because Elf's marketing efforts, from my understanding, are actually really good. And they have a sort of competitive advantage when it comes to that, given their social media presence. So as June says, it might be a makeup recession, or it might be something specific to Ulta that's affecting all the sectors, but might not actually affect Elf in the long term, given that it might be just an Ulta specific thing. So that's why Elf is down. That's why Elf is down. Elf was 88 last October and hit 230 in February. 160 is nothing. Yeah, I mean, Elf has had a phenomenal run. Elf has had a phenomenal run. So is this a reasonable dip? I don't even know, because I don't understand the company that well. I don't know the price action that well. But it was in the lows in October 2023 and then went a lot higher after their earnings back in January. Suraj, thank you for the $5 super chat. Hey, Mitt, can you look at DXYZ SpaceX stock? DXYZ. Oh, Destiny Tech 100. So this is an ETF, I believe, that launched. I heard about this, that is doing a bunch of private companies. So yeah, this DXYZ. This is the ETF. It's up 20% today. I don't know why it's up 20% today, but it's up 20% today. This is the website. Destiny Tech 100 is designed to be an exchange-listed portfolio of the top 100 high-growth tech companies. But these are venture-backed companies. These aren't public companies. And basically, anyone can invest in it without being an accredited investor. So here's the current portfolio. SpaceX is 34.6% of the fund. And then the only other companies I recognize are Superhuman. That's a big email startup. OpenAI, obviously. Stripe. Instacart. Instacart's public, so I don't know why that's there. Public, that's the investment platform. I don't really know if I care that much about that one. Klarna, that's a good one. Discord, Bolt Financial, I've heard of that. Plaid, that's an awesome one. And then Flexport and Supply and Logistics, that's an awesome one as well. Has anyone heard of this? Because I saw this come out yesterday, but I didn't get to cover it too much. DXYZ. So that is the Destiny Tech 100. Look, the reason I don't like to buy the ETFs of these startups, like ARK has their ETF of startups, is because startups only work when you get in early. Like buying Stripe at a $90 billion valuation is stupid to me, because like you don't know anything about the business yet, right? You want to get in when it's early. So, I mean, when you're investing in ETFs or that cover a bunch of these tech companies, I think you really got to know, like, what is the allocation for these companies and how do they operate? What do they look like? And, if you're buying SpaceX at 175 billion, are you getting a good deal, right? Is that exposure actually a good deal? Ulta now down 13.14%. Discord, is Discord a good deal? Like, is Discord actually a good deal, right? Like, I don't know. So with the private companies, I just think trying to get allocation via ETFs that have exposure, you don't know exactly the valuations these ETFs buy them at, and you definitely don't know anything about the financials, because all of that is consolidated confidential information that only the VCs have access to. So to me, I've never been a big fan of that process. But if you did want to get exposure, that is an ETF that's out there that could get it. Suraj says, dude, the float is so low. I think it's going to be wild. The founder has been in the private market side for a while, founder of Forge. All right. I mean, look, if it's a small float, anything could happen there. But if it's a small float, the downside could happen as much as the upside. That's one thing to remember with things like DJT, Reddit, DXYZ. Like when you've got a small float, yes, there is a benefit, but there is also the downside if there's a red day and, things fall down because there's not that many shares. And so there's a lot more selling that would end up happening. But But nonetheless, that is one way to get exposure to some of these venture funds. What else do we have here? What's the other one that we have? SoFi. Look at that, up 3.68%. Let's look at my SoFi spreads. Are they finally in the money? Are we making some money on SoFi yet? Are we making some money? We are up $268, folks. I'm going to show you guys that in a second. I'll pull that up on Robin in a second, and you guys will be able to see it. What data just came out? Rates just tanked. Oh boy, hold on. Things are going up. Things are going up. What data just came out? Wow, everything's going up. Robinhood 1931, Palantir 2274, ARK 47, DNA $1.06, Coinbase 252, SoFi 750, Apple 169. What just came out? Hold on. Something came out. Services PMI. Is it services PMI? Hold on. Let's see. Some news just came out. 10-year just dropped. 10-year dropped a little bit. No, private payrolls already came out. What just got the markets up that much? Hold on, let me go to CNBC. What just got the markets up that much? That was a nice, we're back to 6 cuts this year. Yep. Oh, is Powell speaking? Oh, no, ISM non-manufacturing. Okay, I got the data. Let me pull it up. This seems pretty good, and it's got the market exciting. All right, here we go. Let's pull it up. This right here has got the market interested. Here we go.
In the U.S. sales in Q1, while Tesla shares are under pressure again, the day after 5% on almost 5% on VIX, off about a third.
This is paid for. Let's get to it with Rick Santelli. Hey, Rick.
Yes, Carl, I'm just going to go right to what's moving the market here. ISM Services prices paid for the month of March at 53.4. That doesn't sound so intense, does it? Well, the issue is 53.4. We haven't had a reading that low. It would comp to March of 2020 when it was 50.4 because the readings have been so high. And that is a direct response to that, without a doubt. We're expecting a number over 58. Our last look in the rear view.
Wow. So ISM non-manufacturing is at the lowest level that it's been at since 2020, and markets are excited for that.
Mirror was 58.6, and that was the weakest reading going back to December of last year. This just escalates that. Now let's go back to the headline number at 51.4. That was actually the weakest since December. We just went over prices paid on the employment side, considering we have an employment number on Friday, and today's ADP was a bit stronger than expected. Many saying it's responsible for yields, but really it's a lot of technical features in the Treasury comp.
So ISM Services Paid, essentially it's an index that looks at prices paid for goods. And if prices paid are accelerating at a lower pace, well, that's good because that means inflation should be heading downwards. So U.S. Services ISM PMI actual 51.4. The forecast was 52.8. New orders 54.4. Forecast was 55.5. Employment 48.5. Forecast was 49. Prices paid actual 53.4. Wow, that's the big one right there. That last one that I'm highlighting. U.S. ISM Services prices paid, which is how much people are paying for their actual services. The forecast was that would be on a scale of 0 to 100, 58.4. If it's above 50, it's expanding. If it's below 50, it's contracting. Market thought it would get closer to 60. We came in at 53, which means the rate of growth for the prices we are paying for services in the United States is going down, which is good because that means inflation is coming down, or at least that's one indicator that inflation is coming down. The market seems to like it. Apple 169, Bitcoin. Wow, look at that on Bitcoin. Look at that green candle. There's like 5 of them in a row. 66,493. It was just at 65,700. Talk about a move on Bitcoin. Robinhood 1935. Coinbase 253. SoFi 750. Up 4% on the day. MicroStrategy 1635. Rivian 1073. Where's Palantir? Can Palantir get a little love here? Palantir 2273. Not bad at all. Not bad at all. So there you go. There you go. That was some great news right near the end of the market open that we got that actually changed the dynamics of this day. Again, why this is so important? Because it's continuing to prove this argument that inflation is going down. Over the past couple of days, why has the market been kind of struggling? Because everyone's like, oh, inflation's sticky. It's going to be longer. We're not getting rate cuts anytime soon. I agree with all that. Inflation is sticky. We're not getting rate cuts for a while, et cetera, et cetera. However, there is data showing us that it's coming down. The reason Jay Powell said 3 cuts is not because he's just saying 3 cuts to say 3 cuts. He is seeing some data. Now, we might not get the 3 cuts, but the reason he's saying 3 cuts is because the data is indicating that we are due for inflation to come down. This piece of data we're seeing this morning is another reason for why we might end up seeing more inflation metrics start to head down, and then the market will be a beneficiary of that. S&P 500 right now is 520. We were at 517 in the morning, so that bounced up the S&P just based off that. Not bad at all. Robinhood at 1938 and Palantir at 2271. Palantir basically 2273, 2275 now as we get that data. All right. Not bad, folks. Mr. Seymour Duck, I just saw your super chat. Did you talk about Disney winning the proxy battle? So I have been studying the Disney story. I don't know enough about it yet to talk about it. Probably we'll talk about it tomorrow. I got to do a little bit more research. I just haven't kept up to it. Obviously, I've seen it in the headlines, but I haven't kept up too much. So tomorrow we'll talk about what's going on with Disney and the proxy battle, Nelson Peltz, all that stuff. And we'll dive deeper into it tomorrow. Let's do the word of the day. And then I'll get you guys out of here. Rangy is the word of the day.
Rangy.
Wow, dude, I think I need to quit being a wordsmith. This is just ridiculous. Like, how did it was rangy, dude? All right, be honest. If you saw this word in the chat, did you actually think rangy? Did you actually think rangy, or did you think rangy? Or am I actually on an island where I see this and I think it's rangy, not rangy? Because I thought it was rangy, dude. I didn't think it was rangy. Slender and long-limbed. Okay. The rangy horse galloped gracefully across the open field. The team star player was known for his rangy build and his ability to cover a lot of ground on the basketball court. Okay, so slender and long-limbed. I don't know if I'll ever use this word, but if I ever end up using this word to describe something that's long-limbed, I'll say it's rangy. instead of being long-limbed. It says the pronunciation right under it. Yeah, but it's not fun to look at that. It's fun to just go with intuition, see what happens, and then leave it up to the universe to see if I'm right or wrong. I think I'm like 2 for 55 on word of the days when it comes to pronunciation. Remember that week in January where there was a new French word every single day? It's like they thought I was in fucking Paris or something. They kept putting up a French word, and I was just like, all right, I guess I'm gonna try my best here. All right, that's it for me. Thank you, everybody. I'll be back at 3:45. We'll see how the market reacts to some of this data. Daily Palantir will be coming out probably around 6 p.m., and we'll keep going from there. Again, market seems to like some of this data we got, so we'll keep analyzing that, and we'll check it out at 3:45 and see where it's going from there. Also, big podcast dropping today. Big podcast. Only on Twitter, not on YouTube. The YouTube version will come out tomorrow. Big podcast. Please make sure you're following on Twitter. Twitter in the chat. Big podcast today. That's all I'll say. Big podcast. They'll be dropping probably around 1 p.m. All right, everybody. Thank you for being here. I'll see you guys at 3:45. Have a good one. Bye.